Hi, my name is Brad McMillan. I'm Commonwealth's Chief Investment Officer, and welcome to the March Market Update. February was actually a good month after a very difficult January. Markets were up across the board, earnings reports were better than expected, even sales turned out to be better than expected. In the U.S., the S&P and the NASDAQ both moved into positive territory for the year, while the Dow, despite strong gains in February, was still down a bit. That's okay, the trend is moving in the right direction. Earnings improved across the board, with the number of industries reporting earnings growth up substantially over the month of January. And in fact, even better than earnings growth, we saw sales growth tick up as well, which should lay the groundwork for future gains. In developed markets, Europe did relatively well as their economies continue to improve, and even the emerging markets are dealing better with the fact that we are going to see the tapering. We've seen the initial reaction, and now they are starting to come back. Overall, a very, very positive mark for the financial markets. What we have, though, is a disconnect, once again, between the financial markets and the economy. We continue to see signs of slowing growth in the economy. We saw a second month of relatively weak employment projections. We saw manufacturing weaken. We saw housing continue to weaken. And the question everyone's asking right now is this a sign that the economy is starting to stop recovering? Or, in fact, is it the weather? In fact, it's probably a little bit of both. The weather undoubtedly had a significant effect, and you can see that, particularly for housing, in the way the different regions responded over the month. At the same time, we are seeing some signs of slowing growth. For example, GDP was adjusted down from 3.2% to 2.3%. A couple of reasons for that, none of them particularly good, but at the same time, there were some green shoots in there. We saw business investment, one of the particular issues that has really held back this recovery, tick up significantly. So even there's some good news. And I expect that most of what we've seen is in fact the weather, and we should continue to see improvement going forward. The worries, of course, are politics. We've seen Europe continue to wrestle with anti-European parties. At the very end of the month, we saw the Russian invasion of the Crimea. We have political issues out there. We've been very fortunate in the U.S. that, in fact, most of those political issues have been resolved in the short term. But at the same time, as we're seeing, we do remain hostage to uncertainty elsewhere in the world. With that said, I think we can look back on a strong February and enjoy it, and expect continued economic improvement in the U.S., even though we have to be aware of what's going on in the rest of the world. Thank you very much, and I'll talk to you next month.